I want to welcome everyone to our webcast with none other than the Vincent Walden. Vin runs our global equity strategies here at City Different Investments, and Vin and I have worked together a long time, since 2002. I'm Connor Browne, our CEO and a portfolio manager on the domestic side here at City Different. Um, Please ask questions. Feel free to put questions in the chat. We'll keep an eye. We may get to them later in the webcast, but we'll collect them and make sure to ask Vin whatever's on your mind. New glasses, Vin?
Yes, thank you for noticing.
I
They
think
make
you
me
look
look like
smarter
10 years younger.
and 10 years younger. I dressed up for you. I cut my hairdo for this, Vin. I hope you appreciate
Yeah.
that.
My style, yeah.
Okay, so it's spring here in Santa Fe. It's beautiful outside. Trump said he's not going to fire Jerome Powell. It sounds like Treasury Secretary and Trump are easing off of a hard line on China tariffs, which has the market rallying these next couple of days. So maybe it's all good. But just first off the top, what do you make of all of this craziness, Vin Walden?
Craziness. Why have you noticed some unusual things going on? As we're talking today on April 23rd, the markets are down a bit this year, 5% for the world equity index, and more for the U.S. markets. The U.S. markets have dragged down the global picture, has suffered the most, but Europe and Asian markets have done okay, much better than the U.S. So, but looking at the overall picture, markets down a bit, you might think, okay, not so dramatic, but obviously that belies a few hiccups that we've seen, particularly at the beginning of this month, especially around Liberation Day. That was something to behold for sure. And as you're following that, you might see sort of aghast at the announcements, this public proclamations, which I happen to think are, much of that was a negotiating tool. But the market was doing its job rationally in many ways as consumers and investors tried to incorporate this new reality or ostensible reality into the plan. So, the market responded quite negatively, treasuries included, the dollar included. And then, there's been a reaction from the administration and a little bit and a fair bit of backpedaling, as you might have guessed, as the administration incorporates, uh, you might say the laws of economic physics, the realities, into their even into the stated plans. So I think that's been healthy, in that way.
And
Yeah. The
go ahead,
great
go ahead.
the great philosopher Mike Tyson said, everybody has a plan until they get punched in the mouth. And there's some truth to that. I think it applies even to our administration.
Um, you've hinted maybe at your answer to this, but we've been through a lot in the markets. We started working together at the tail end of the bursting of the internet bubble. We worked together through the great financial crisis, a global pandemic. Um, how would you compare what's happening now to any of those sort of marquee events in our investing history together?
Yeah, as you look back, just in our careers, we've seen, some of the more dramatic um, dislocations that come to mind or include, the Y2K. Remember that one? And then the TMT bubble bursting and more recently the COVID pandemic. I think the common theme is that those events don't quite have a perfect precedent or analogy. There's always something a little bit different, and the word unprecedented gets thrown out quite regularly around those occasions. So look, uncertainty goes up. No surprise. Discount rates go up, prices go down. But then the market adapts and incorporates that into reality, and business goes on, and equities play out the way they have generally, for decades and decades. Um, we of course are constructive on equities as an asset class. I happen to think in the long run it's the best asset class in many ways. But the price of admission, if you will, the cost of that is, there is a fair bit of volatility and drama. And now more than ever, the media is playing you. They know what sells. They know what sells, and they'll keep you. You're reading these headlines about bad news here, bad news there, and they recognize that. They'll keep serving it to you every day if you want to read it every day.
In a recent blog, our colleague Rob McDonald on the equity team at City Different talked about watching the dog walker and not the dog to get a sense actually of where the dog is going. In that
Mhm.
analogy, I struggle to figure out who the dog walker is at the moment. What would you what would you so I think you and I both believe in very long-term investing in individual businesses as an owner and ignoring the noise, and not trying to prognosticate too much about the macroeconomic climate or what's going to happen next, because that's very hard. With that caveat, like how do we know, or what will be the indications that this is either, as you said, a negotiating tactic that will walk back and, perhaps there will have been some uncertainty for a time, but we'll get right back to what the global economy was doing, versus the possibility that this is a real material change and an event like some of those other events that we mentioned before.
Yeah, it's a fair question. I think I wouldn't say ignore the noise. Maybe for clients and for very long-term point-to-point investors, you could essentially ignore it. But for us as professionals, we want to pay attention, be vigilant, and incorporate shifts in the landscape, in the long-term landscape, into what we're doing. And a big part of that is just incorporating recent prices and price dislocations and thinking, okay, how does this compare with the actual long-term prospects? So if you really decimate a company's P&L for a year or two, that doesn't mean the value of the whole company you know, drops to zero, or even by half. You just think about it in terms of long-term profitability, long-term cash flows, and then you realize that these events are usually temporary. They always have been in the past, and manageable. I say sometimes to my friends, remember that time the market crashed and it never came back? And you're like, well, wait a minute, what are you talking about? The point is that hasn't happened. And as Leon Cooperman used to say, the market, you know, tends to do okay, and the world doesn't come to an end very often. So, keep that in mind. The world doesn't come to an end very often.
Let me
Uh,
push you a little bit
I
on
would
this.
say, sorry,
Go
just to
ahead.
elaborate a bit more on in this recent episodes. There's governing, in my opinion, our opinion as the team has analyzed these things. There's governing factors at play. Like I mentioned, the laws of economic physics that actually matter and will, curb the behavior of the administration and even the announced plans of the administration. So I'm thinking of, the bond market, which matters a lot fundamentally, and the administration knows that. And you saw at the beginning of April, you saw treasuries move from under 4% to 4.5%, the 10-year treasury to 4.5% in 1 week. And it was just, the yields just went straight up that week. And you
I,
can
I
imagine,
believe I believe we call that the yippies then.
yeah, that's the technical term.
Yeah.
You can imagine the Treasury Department, Scott Bessent looking at his Bloomberg terminal as rates went like this that week, and he's like, "Whoa, I didn't see that coming." So they have to, respond and react accordingly to that. And then on the political front, on the consumer front, consumers are not going to be happy. Liberation Day, if you take it at face value, it means, liberate us from affordable, budget-friendly imported products, liberate us from nice selection of fresh fruits and vegetables from South America and Mexico at the supermarket. Liberate the auto industry from its profitability. As people see that, playing out, voters will respond. They say, wait a minute, we didn't vote for that. So, Ted Cruz pointed out the mid-year elections, just coming up next year, it's going to be a bloodbath. Now he's speaking about, again, the ostensible trajectory and status quo. So the majority party doesn't want to experience that bloodbath, and so they'll adapt accordingly.
Yeah, yeah. I think I see some bullish, probably low probability outcome of all of this, that the negotiation works and we get actually closer to global free trade
Yeah,
than where we started. But I
yeah.
that seems a little bit less likely to me than a more permanent, lower, sort of more manageable tariff on all goods into the US. It seems like the administration is interested in that. Uh, to what extent, like, do we really need to think about, as we're investing in businesses, a reordering of the post-World War II sort of global order, with the US as the protector of the world in some ways, as
Yeah.
the US as the champion of free trade, where perhaps there are tariffs in other countries as our goods go in, but actually, in so many ways, it seems like we as a nation, businesses in this nation, have benefited so much from it. How much do we need to think about that actually shifting permanently here?
Uh, I mean, look, nobody knows permanently and long term exactly how those things may play out. If you're talking about the geopolitical realm, we have to have a separate lengthy conversation about some of that. But economically speaking, in terms of trade policy, the tendency and the desire from the administration is clear. And so there will be, a tendency in some of those ways, and there'll be some concessions from trade partners and some rebalancing. But as far as the dramatic changes or changes anywhere near the magnitude of what's announced, we could go into there's multiple dimensions of absurdity there. But just one broad observation, we don't hold all the cards as America. We don't hold all the cards. Um, pick your country, and we could go through some of the examples. But with China, we depend critically on them for a lot of stuff, not just things that we want, like kitchenware and toys and affordable imported furniture, but stuff that we really need, that's critical to our defense industry and our medical technology and research. You've probably heard about the rare earth minerals, where China really dominates in some of these categories. This is metals like antimony and gallium, and fairly obscure small categories of commodities, but critically important for semiconductor manufacturing and medical radiology machines and lasers. And it turns out China produces the majority of those things. So that's a China example. The example that's near and dear to our hearts as City Different global investors is, of course, the uranium market. And we've been beating the drum about uranium for several years now. Turns out we're not mining much uranium in the United States. In fact, we mine these days approximately zero uranium, but we consume a lot because we have, call it 90 nuclear power plants. So the point being, we have to buy it from our trade partners, number one being Canada. And there's really no alternative. If you want affordable, reliable, efficient electricity, we have to buy uranium from Canada, period.
Yeah,
Tony, the point of all that, these various trading partners have their own strengths and points of pushback, and so they'll find agreements that work for everyone.
great. I have more questions, but a couple that have come in so far, I want to hit. And I remember prior in our prior work at Thornburg around Brexit, a lot of talk at the old shop about the euro, the stability of the euro, and
Hmm.
gold. A
Yeah.
question came in. What's your take on gold here?
Yeah. Yeah, it's funny. We were talking on the team about gold again recently, and we followed it off and on for years. I happen to agree with Janet Yellen, who said, you know, I don't think anyone has really a perfect model of what drives gold prices, but clearly there's a significant element, and you could give some examples of why that seems to be true. But clearly there's a significant element of gold as sort of inverse in confidence in the financial system and
Mm,
inverse of confidence in the outlook for other asset classes. So we've seen that playing out this year as gold's reaching new multi-year highs almost daily. So it's an intriguing asset class. We're not directly exposed right now, but I don't disagree that it might do well. It wouldn't surprise me at all if it continues to do okay.
mm.
I think there, the obvious pushback is you got to be careful about being too conservative when times look tough because the market is forward looking and there's a decent chance that some of those scary things are already reflected in prices. So I don't
That's a
think
great point.
in general, when the headlines are tough, people pay attention to that, and so there's a cycle, and it will persist. The more readers, the more enthusiasm people show for that kind of news, the more you're going to see it on your screens. But the right response most of the time, and certainly for long-term equity investors, is not to go hide in the corner with this primordial instinct to flee. uh, for equities, you need to have a long-term mindset and recognize that these periods of adversity and volatility, while they're unsettling, are actually opportunities if you're a long-term oriented investor.
Thanks. Um, Another question came in. Germany recently increased their allowable debt levels to spend money on defense and infrastructure. Could other European allies do the same, sparking green shoots of growth in Europe?
Yes. Yeah, absolutely. That's been a fair criticism of Germany for decades now, that they're just too frugal and too focused on the past. And this news in general about Germany loosening the purse strings is good news, for sure. You've seen it's a uh, remarkable enthusiasm for European equities, and especially for the European industrial base. There's a German, believe it or not, a German tank manufacturer that was just operating like in the wilderness, and nobody paid any attention to this company for years and years and years. And then, woof, all of a sudden, it's been a fantastic stock. We're in that case, we're just innocent bystanders, but it is interesting to see how that has played out. We think like in our portfolio, we have a combination of companies many companies that we think are fairly insulated from the tariff drama and the tariff related changes. And that includes, of course, the nuclear energy related investments that we continue to be enthusiastic about. And we have others, candidly, where we think the prospects have been bolstered, have improved in the last couple of months. Call it, for example, related to this uncertainty around global trade, and the U.S. has shown that it's a less reliable trade partner than people may have thought, and in some cases there will be less volume of imports coming into the U.S. But those factories that are providing those imports, they still want to sell their stuff globally, and they're going to be looking for new markets. So, we have an investment, as you know, in Mercado Libre, which is an e-commerce leader in South America. And we think they're going to be a beneficiary of all of this, to the extent that Chinese and Asian exporters want to find, more markets and new markets for their goods. They can sell them into South America. The terms of trade and the prices that they will be offering to our company, to Mercado Libre, have improved quite a bit. So we're quite enthusiastic there, and yeah, believe it or not, that company has a brighter future than we thought last year.
I don't have it up. How is the stock? Has that stock traded off like everything else in the world, even as perhaps its opportunities get better in the future?
Alas, it has not. To my point earlier about the market recognizing these things and incorporating some of these changes. Mercado Libre has done generally well for us as an investment, but this year it's up 25%. Just looking now on my screen.
So
Yeah,
a lot of supply of what they sell is still out there in the market with huge tariffs into the US, at least for the moment,
hmm.
reducing demand pretty significantly. They should have a lot of goods to sell at potentially lower prices than they otherwise would have.
Yeah. Yeah. We boost the strength, the appeal of this business model and their value proposition comprehensively. So, Mercado Libre has been a good investment for a good long-term holding for us, but it's still, early days. E-commerce in South America has a long way to go.
Could you speak to sort of energy transition, that theme in the portfolio, and the potential impacts of Liberation Day on that theme?
Yeah, I think overall the effect in the nuclear space is quite low, maybe nothing at all. But as you know, we have a significant investment in Talon Energy, which owns the Susquehanna nuclear power plant based in your home state of Pennsylvania. And there I think what really matters is electricity is a growth market from now on. It's because of AI, because of electric vehicles. And I think those are secular growth trends that will drive growth in demand for electricity in a way that we haven't seen in the previous years. And Talon Energy is very, very well placed to capture that. If there's some slowdown in overall economic growth, that's okay because I think what really matters is those secular trends that that underpin the demand outlook. And Talon, we've written about Talon, quite a bit on our blog, by the way, if people want to read more. But they have 2.5 gigawatts of clean, reliable, super efficient nuclear energy for sale, and demand for electricity is going up. They're in a good spot.
How about Golar and potential impacts on Golar?
Golar also in this category. Thank you for mentioning that. Somewhat like Mercado Libre in that their prospects are better than they used to be. And by that I mean Golar, recall, as a LNG, liquefied natural gas producer that operates entirely outside the U.S., but as a provider and a participant of liquefied natural gas globally. The fact that they're a non-US counterparty, a non-US producer, makes them that much more appealing. Like you can count on Golar, management for reliable, relatively clean energy supply. They don't have capricious management or governance is changing the policy, changing the rules from from day to day. So Golar, again, their appeal, their value proposition in the eye of customers has now been elevated, and we think that's going to be great for us.
Tends to benefit, yeah. And anything that you're seeing as really interesting opportunities being created? You're right. I love that point about, I said, ignore the noise. And you said, well, hold on. If the noise is a lower stock price that gives us an opportunity to buy something at a much better value, then let's take advantage of the noise. That was a great
Yeah.
point.
Yeah.
Any opportunities that you're seeing out there created by all of this?
Yeah, we've shifted a little bit just like that towards companies that may have suffered a little bit recently and maybe perceived as losers in the current status quo, if you believe that we're on this path to ruin. But we happen to think the outlook is not that dismal and actually okay, and in many cases quite good. So lower share prices, we kind of welcome that. Again, provided that you have the long-term perspective and the stomach to stay with these things for 3, 4, 5 years. We think that the expectation, the future returns are going to be better now.
Great. Awesome. I want to make sure before we leave to remind to let everyone know that a replay of this will be available. So if this was helpful, if listening to Vin speak was helpful, there'll be a link. You can send it out to all of your friends. You can, if you're an advisor, you can send it out to clients if you think it would be helpful. So take advantage of the replay. And then our next quarterly webinar, quarter end webinar with all of the investment team members is May 8th at noon. So we hope hope you'll join for that. Any closing comments here, Vin Walden? Anything that I should have asked that I didn't?
I just underscore that point that, don't let the news uh pull you off, shake you out of your long-term investment program. Stay in the game, the long-term orientation, and yeah, just keep an eye on the fundamentals. That's what will determine the ultimate outcomes, not these headlines, not the current announcement from the administration, any of that stuff. It tends to just look at long-term history, and you'll see how these things just get kind of smoothed out and become insignificant as you look back on them.
I'm happy to mention I have added to my City Different Global Equity personal exposure since Liberation Day. Seems like a nice opportunity to me. So,
Yeah,
all
sure.
right,
Yeah, I added myself not too long ago, and so there you have it. That's what I think.
all right. Well, thank you everyone for joining us. We really appreciate it. Thanks for your time, Vin.
Good. Thank you, Connor. It's
Okay.
fun. Bye.